Namaskar friends, today we are going to see HDFC Bank's profit drop even after IPO windfall. They have made 9,000 crores from IPO, till the bank's overall profit has dropped. How is that even possible? You might know finance well, but there is a twist behind these numbers. In this video, we are going to break it down completely for the performance of HDFC Bank for the quarter April to June 2025. IPO, bonus shares, dividends, all over the headlines. But what about the profit? That took a dip. Why? Let us unpack how that has happened and what is really hiding behind these numbers. Total profit has gone down. The consolidated profit was 16,258 crore rupees. It is down from last year's 16,475 crores, more than 220 crores drop. Why is this a big deal? Because this was the quarter they earned a one-time gain of 9,128 crore rupees from HDB Financial Services IPO. Even with the IPO gain, why did the profits drop? Simple answer: provisions. HDFC Bank set aside 14,442 crores in total provisions, 9,000 crores in floating provisions, 1,700 crores as buffer for possible risks. Basically, they quietly saved a massive amount of money anticipating potential bad loans in the future. What happened in the HDB Financial Service IPO? After the IPO, HDFC Bank's stake in HBD dropped from 94.32 to 74.19%. That is a drop of 20% ownership. Though they earned one-time pre-tax gain of 9,128 crores, it doesn't reflect the bottom line profit because of heavy provisions. How did net interest income perform? Standalone NII is 31,438 crore, which is 5.4% year-on-year growth. Market expected 31,885 crore. So actual result missed the street estimates. Margin, what is going on there? Core net interest margin is 3.35% only. Previous quarter, it was 3.46, meaning there is a small drop. Operating costs, are they rising? Yes. The operating costs are 17,434 crores, that is 4.9% increase year on year. Employee cost 6,158 crore, other expense 11,276 crores. Excluding IPO gains, the cost to income ratio stood at 39.6%, which is loss. Loan and deposit growth, where is it? Loan and deposit growth. What is the scene? Gross advances 26.53 lakhs crore, that is 6.7% year on year growth, that is loans. But total deposit receipts 27 lakhs.64 crores, 16.6% growth. CASA, current and savings account total deposit ratio is 33.9, dropped from 38.2 last year. Savings account 6.39 lakhs crores and current account is 2.98 lakhs crores. Bad loan, which is unavoidable reality. Gross NPA is 1.4%, net NPA is 0.47%, a slight increase. And the reason behind such heavy provisions are insurance arm and other incomes. Insurance subsidiaries profit before tax was 1,645 crores. Other income 21,730 crores rupees. Fees and commission was 75.9 crores. Foreign exchange and derivatives 16.3 crores. Trading and MTM gains 101.1 crores. Dividend plus bonus rupees 5 per share special interim dividend. Record date is July 25th. Payment on August 11th. The bonus is 1.1 bonus shares. Record date is August 27th. Subject, of course, shareholder and regulatory's approval. Overall picture, yes, operating profit is rupees 35,734 crores. Provisions nearly wiped out the gains. The provisions are 14,442 crores. Return on asset is just 0.48%, which is less than half a percent. The consolidated income is 1.33 lakhs crores, up from 1.17 lakhs crore last year. Then here is the question. Why did the share price drop from 1.5% despite a major IPO gain? Why did the profit miss happen? Why did the CASA ratio fall? Are these just numbers, or do they reflect deeper issues with investors' sentiment? For investors, core business growth is the key. IPO or one-time gains are temporary high points, but things like net interest margin, asset quality, deposit growth, and CASA ratios, that is the real deal. So even if HDFC's number looks solid, the big provision created a dark cloud over it. And what is a floating provision? It is like a bank saying we are keeping some money aside just in case. That is a smart move. But for the market, it feels like short-term earnings are taking a hit. Even when there is an IPO gain, investors say, okay, but what is actual growth? That is what HDFC Bank now needs to prove. Bonus and dividends are great, but in the larger performance story, they are like a cherry on a not so sweet cake. What really matters is sustainable core growth. So next time you see an IPO gain or big dividend, don't jump to conclusions. Look at the provisions, margins, deposit trends, NPAs, CASA ratio. All of it paints the real pictures. Even banking giants like HDFC have short-term challenges. But to their credit, they are playing it safe. And that could be smart in the long run. Let us hope for the best.